If you've been turned down for a reverse mortgage because you owe too much money on your home, then pay close attention. This might be the very most important video that you watch all year. Now that was pretty dramatic, but I'll prove it and you will understand. So my name is Jason Eichmiller, and over the years I've helped over 450 seniors learn about and get reverse mortgages. But for all the folks that I've assisted, there's a huge number of people who I've tried to help, but they just owe too much money on their home to be able to get a reverse. The reverse is underwater. So thankfully, there's this brand new program that'll it's called a hybrid reverse mortgage, and it'll give you more money. You qualify for way more money than the traditional reverse mortgage. So what happens is the folks that I talk to, they're not only able to pay off their existing mortgage with the hybrid reverse, but they're able to get extra cash out to pay their bills or maybe to stuff in their piggy bank. So in a second, I'm going to take you to a PowerPoint where we're going to talk about Dee and Joe's situation, and we're going to talk about Tina, both clients of mine who've used this hybrid reverse. And just think about your scenario and think about if this hybrid can work for you. But if you need to get rid of your mortgage payment, if it's a cash flow issue, then I'm pretty sure this hybrid is going to be exactly what you're looking for. All right, enough talk. We're going to go to the PowerPoint in 3, 2, 1. All right, so in this video, I'm going to show you exactly how you can drastically lower your mortgage payment and maybe get some extra cash to pay off the bills, or shoot, just to fill up your piggy bank, even if you've been turned down for a reverse mortgage already because they told you owe too much money. And there's a lot of folks out there. I'd say about half of the folks that I work with and I speak to, they really want to get a reverse mortgage. They want to get rid of their mortgage payment, but just they owe too much money on the reverse for them to be able to do it. Or they owe too much money on their home to be able to do the reverse. So this is a great tool. It's a great program where if you owe too much money on your house, you still have hope, and it's really cool. So what we're going to do is, by the way, this program is called the new hybrid reverse mortgage, and what we're going to do is we're going to go over a couple of clients, folks that I've helped out, and then we're going to look under the hood so that you can see exactly what this program is and how it might work for you. But before we do that, let's look at Joe. We'll do a very brief overview of Joe and Dee and how this hybrid reverse worked for them. So Dee and Joe, Dee is still working full-time, and she's an account executive with a major mortgage company. So she understands this stuff very, very, very well. So Dee and Joe, though, Dee wants to retire, but right now with her mortgage payment and with the bills that they have, it would be damn near impossible for her to retire and still live comfortably, just because when she retires, obviously she's going to lose her income, and fixed income isn't gonna pay the bills. She'd have to come out of her savings. So the plan at first was to get a reverse mortgage. So we tried. Her home appraised for $350,000, and they owed $159,000. But that $159,000, they were short. They didn't have enough equity to qualify. So if you look at it, the HECM was almost $35,000 short, meaning to close the loan and pay off the $159,000, they would have had to bring $35,000 to the table. And the jumbo proprietary reverse mortgage, which normally gives a little bit more money than the HECM, it was $22,998 short. So both of those were no bueno. They couldn't do it. So they were kind of at a loss. And at that time, that was when this new hybrid reverse came out. So they were my very first clients actually with it, and so we kind of walked through and we learned the program together. But in the end, fast forward, and we'll go deeper into it. But in the end, the new program, the hybrid reverse, it paid off their $159,000 mortgage, and it gave Joe and Dee $33,139.49 in tax-free cash, which they used to pay off some of their other bills. Now, Dee is still working. She's making pretty good money, but now she has a path. When she wants to retire, she's going to be able to retire. So again, they were the very first couple that I helped with this program, and I'm so happy for them. So we're going to revisit them, but real quick, just real quick about me. My name's Jason Eichmiller. I've been doing reverse mortgages since 2008, so that makes about 13 years or so, and I've helped over 450 folks learn about and get them. So you can see my contact information below. So if you decided, like right now, you don't have to wait till the end of this. If you want to see if one of these hybrid reverses, if it can work for you, then you can either go to hybridreverse.com, or if you like, you can just give me a shout. My phone number's right there, 888-309-9705. And that picture, that's just me with my wife Bridget, daughter Alyssa, Jason, and Molly on my birthday hike, actually on April 17th of this year. We went out into the wetlands and saw some pretty cool stuff. So anyway, enough about me. Let's talk about some of the folks that I've helped. If you look at, and I'm not going to spend a lot of time on these reviews, you can read them. Jerry was a wonderful client, actually is a wonderful client, and she told me, she said, in other words, he's wonderful. So she was great. Nadine and her husband Mike were terrific to work with. Locally, I do this all over the country, but it's nice going out and meeting my clients. So these are some of my local clients that I've helped over the years, and then there's a couple more testimonials. I've got tons of them, but I just wanted to show you a few. Ed, we set up a reverse for his 91-year-old aunt Clara to get home health care, and Irene below, she was just absolutely awesome to work with as well. We did a really cool program with that where there were like basically no reverse mortgage fees, and she was so happy, which it's incredible. So anyway, enough about that. Now let's go back to Joe and Dee's case, and let's take a little bit of a deeper look into it so that you can see kind of the back end of what went on with this hybrid reverse. And again, while you're doing this, kind of think about your situation and think about how you might use it to your advantage. So again, when Dee and Joe applied for the reverse mortgage, this is basically a copy of the first slide, but I want to revisit it real quick. So they applied for a reverse, but they got turned down because they owed too much on their house, and the house was worth $350, $159 was owed, and the two reverse mortgage options were both short to close. So the new program, the hybrid, again, it paid off their $159,000 mortgage, and it gave them over $33,000 of cash. So, and tax-free cash, that is very important. You don't want to pay Uncle Sam if you don't have to. Now, let's dive deep into this and let's see exactly how this worked for Joe and Dee and how it can work for you, because it is different. It's slightly different from a traditional reverse mortgage. So, how this worked for Joe and Dee. With the hybrid reverse mortgage, we're going to set it up in kind of 10-year increments. For the first 10 years of their loan, Joe and Dee are going to make a minimum mortgage payment. So a very, very, very small mortgage payment. So their loan size ended up being a little bit over $201,000, and their monthly payment for the first 10 years is just $498.55. That's pretty low to pay off your mortgage, to get $33,000 and to have a total loan size of just about $202,000, only paying $498 a month. And Joe told me he's not even seeing that money come out of his bank account. It's so low. But then kind of fast forward to when Dee decides to retire, when you make a payment that low, that's well within their budget. And what I do is I run a financial worksheet with everybody that I help just to make sure that the payment is going to be okay now and it's going to be okay when they retire down the line. So that's the first 10 years. So first 10 years you make a minimum payment. After 10 years, the loan, without you having to do anything, without you having to pick up the phone, fill anything out, after 10 years, the loan automatically converts to a reverse mortgage. So what does that mean? After 10 years, you don't have to make any payments on the principal and the interest of the loan. Now, of course, Joe and Dee will continue paying property taxes and homeowners insurance, and they're in an HOA, so they have HOA fees too. So you got to keep paying your property charges. But after 10 years, it's absolutely, you don't have to pay anything for principal and interest. And that's what really, really, really excited Joe and Dee. They weren't just looking towards now, but they were looking towards their future as well. Now, what you might be asking is, and it's a very, I understand the question, home values are so high right now. So why are reverse mortgages getting turned down due to lack of equity when your house is worth so much money? So we all understand, I mean, depending on where you're, I don't know where you live. I live right outside of West Palm Beach, Florida. And our home values they've gone up pretty drastically over the past few years, and yours probably have too. So we understand that. But what's happened also in this world is since January, interest rates have gone up as well. And in the reverse mortgage world, when interest rates go up, you qualify for less money than when interest rates are low. So you look here, as interest rates go up, your borrowing power decreases. So with that said, a lot of and really it's over half of the folks that I speak with, they just owe too much money on their home to get a reverse mortgage. But they're either on fixed income or they're planning to retire. I've met very few people who plan to work every single day of their lives until they die. So they just want to set it up so that when they do retire, they're not going to have to be burdened with the cash flow implications of paying a massive mortgage payment. And maybe if they have bills, they can get some extra cash to pay down the bills as well. This is all about setting up retirement. So I hope that makes sense. So let's do another example. We talked about Dee and Joe, but we're going to talk about my friend Tina also. So Tina lives in San Diego. She has a $1.54 million home, and she owes $685,000 on it. Tina's mortgage payment, it was $3,467 a month. She's a widow, by the way. So when you look at her income, again, we do financial worksheets for everybody just to make sure this is the right thing and see how much money they can save. When we ran that financial worksheet, she was short, meaning she was coming out of her investments $941 every single month. That's tough. She was draining it down, plucking those leaves off the money tree, and that's no bueno. So when Tina applied for a reverse mortgage, something similar happened to her as to what happened to Joe and Dee. Her reverse mortgage, now she owes way too much money to get a HECM, which is the traditional reverse mortgage, but I put it there anyway. It was $321,000 short. That was never even on the table. But the jumbo or proprietary reverse mortgage was on the table. And it ended up being $36,852 short. Again, not good. She didn't have the money to comfortably come to the table to pay down that $36,000. So again, we flexed over to the hybrid reverse. And let's see what happened. Could this unique new program help Tina? I'm building up some suspense, although you really, since her example's on here, you know what happened. We helped her. Okay, so Tina is now financially secure. What we were able to do with a hybrid is we were able to pay off Tina's mortgage of $685,000. And remember the structure with this thing, right? For the first 10 years, you make a minimum payment. And after 10 years, you don't make any mortgage payment. Although the compliance hawks will have me say, yes, you do still have to pay your property taxes and homeowner's insurance. So for Tina's first 10 years, her mortgage payment is only $2,193.61. That's wild. That's a $1,273 savings every single month, which means that instead of coming out of her investments, $941, she's actually cash flow positive. And she told me sometimes she's thinking about maybe putting some money back in, but really she's more comfortable now. She's able to go out once or twice, and she's just able to live her lifestyle, which is pretty neat. And here's the kicker, by the way. We don't even talk. The biggest thing is cash flowing better so she didn't have to make the mortgage payment. But Tina, just as a function of this program, Tina got $86,540 in tax-free cash. So we paid off her mortgage and gave her $86,000. Now go back to that new payment, that $2,193. That is a total of $2,193. That's what she's paying for a new mortgage of about $760-ish thousand, $770. That's crazy. That is so low. And again, after 10 years, no mortgage payment. She could handle that. She could handle that $2,000, and Tina was so thankful. So again, kind of jumped the gun. Her payment for a $786,940 loan is only $2,193. And you already understand that after the first 10 years, the loan automatically converts to the reverse. It's pretty cool. Pretty cool. So now we heard about Tina, and we've heard about Joe and Dee, but let's talk about you. What do you need to qualify? How can you qualify for this? So here we go. To qualify for this hybrid reverse, number one, you have to be 55 or older. You don't have to be 62, just have to be 55. The minimum payment or the minimum loan amount for this is about $100,000, and they can go up to $4 million. Your house is probably somewhere in that range. So they loan a small amount to a very big amount. Yes, we do look at income, we do look at credit, but it is extremely loose. We're not really concerned too much about perfect. We don't want perfect credit. Well, perfect credit's fine, but also okay credit is fine as well. And for income, we just want to make sure that you have enough money coming in to afford your senior living expenses. This is the kicker, though. This is what's important. This is why I wrote it in red. You need to have at least 10 years of mortgage payments remaining to do this. Why? I don't know. It's an investor thing, to tell you the truth. I don't have an answer on that, but it is true. You must have 10 years or more of mortgage payments remaining to get this hybrid reverse. Now, who does this work for? Right? We're going to summarize this real quick. I understand a reverse mortgage is normally perfect. If you can knock out your payments day one, fantastic. It's wonderful. But again, there's a lot of folks who can't do that because they owe too much, and the reverse mortgage won't lend them enough money. So still, lower in a not perfect world where you're looking for better and you're looking for a lot better, getting a drastically lower mortgage payment for just 10 years, it ends up being a massive benefit for the folks that I help. So a couple scenarios. Number one is if you're still working, but you're planning out retirement and you're looking at your cash flow and you're kind of scratching your head and saying, how am I going to do this? Because my expenses are kind of high and I don't want to live in the poorhouse. Ramen noodles and hot dogs don't sound good to me. I still want to continue my lifestyle. This will be a perfect scenario for you to investigate this loan program. If you have other expenses like credit cards, business expenses, you want to treat the grandkids, you want to replenish your savings account, or you just want to pay off the credit cards, then this works really, really, really well because you get that extra money. You can use it to either put in your piggy bank or you can use it to pay off those loans. So this loan, a lot of times, this really is a cash flow tool. So that's in a nutshell, kind of high level of who this works for. Some questions that you might have, you probably do. So let's go over some. So I make a low mortgage payment for the first 10 years, but how low is it really? Because low is it's a subjective term, right? So the exact answer, I don't know until I run it. So if you give us a shout or go to hybridreverse.com, we can chat on the phone and I can draw up a scenario for you. But if you look at Joe and Dee, they funded on August 16th, 2022, and their payment on a $201,000 loan is just $498. And then you look back to Tina's scenario, her loan size was about $786,000, and her payment was like $2,193. So it's about 3% of the loan size annually. Super, super low. You'll be able to handle that. Now, next question I get is, well, I wanted to reverse it first, so I'm going to get this to improve my cash flow. But what if like a couple years down the line, my house value goes up again? With this program, you can always just, if you have the equity to flip it to a reverse, we can just refi you and flip it to a reverse. Obviously, it's case by case, and you're going to have that equity. But absolutely, if you want to turn it into a reverse, we can look into that. If you want to, by turn it into, I mean refinance it to a reverse, we can certainly look at that. If you want to pay it off, you can. Say you hit Powerball, you want to pay the thing off, go for it. No worries at all. No prepayment penalties. If you want to make payments every once in a while, you can do that as well. Going on to more questions. What happens to my house when I die? So this is just like a traditional mortgage or traditional reverse mortgage. When you die, your heirs get your house. Whatever is owed has to be paid back through the sale, or if they want to keep it, through refinancing it. And if they sell it, just pay back whatever's owed and the kids get the rest. Hope that's pretty simple. There's a lot of misconceptions in the reverse mortgage world about that. You probably, since if you've seen my other videos, you understand that the kids get the house, but it's good to reiterate that. Do all the big reverse mortgage lenders have this program? Can I go anywhere? No, you can't. At the current time, there's only one reverse mortgage lender who offers this program. And this is why, like when I set up Reverse Mortgage Reality and Key Home Lending, I wanted to be signed up with every single reverse mortgage company because of scenarios like this, right? I wanted to make sure that if a program comes out that can help you, that I've got access to it. And look at that. A program came out that can help a lot of folks who got turned down, and we've got access, and we can roll through this. So to find out if you can qualify, obviously, give me a ring. You can call. Let me see. I'll go to the next page. This is the website, Hybrid Reverse. So you can give me a call at this 888 number that's right above there, 888-309-9705. Or you can just go to hybridreverse.com and fill out on the right-hand part of the page, fill out your name, email, contact information, kind of your goals, and then I'll reach out to you pretty quickly, and then we can go over together. We'll go deeper into how the program works exactly for you, and we'll figure out if you can do it or if you can't. And as kind of a bonus on the Hybrid Reverse page, you can actually see I did a kind of a long interview with Joe and Dee, but I condensed it to the couple of minutes that was pretty powerful. So you can see a little snippet of my interview with Joe and Dee right on that page on hybridreverse.com. And I'll probably just release the entire my entire interview with them somewhere on this YouTube page later down the line. So how to learn more? Again, you can go to hybridreverse.com, or you can give me a shout. I also have my email address, jason.e@reversemortgagereality.com. So feel free to email me there. But really, like, kind of as a summary, I absolutely love this program. And unfortunately there's so many folks who just get turned down for reverses, but they really need the payment relief. So I'm so glad that this program was out there. It kind of surprised me when it came out because I've never seen anything like it. But now we've had Joe and Dee, we've had Tina, we've had a bunch of folks go through it, and they're just so happy with how their expenses and how their expenses are set up. So it's really it's a game changer. This is absolutely a game changer for retirement, and I'm really proud to be able to work with folks like that. So if you need help, I'd be glad to. I mean, I'll do everything that I possibly can to help you. So go ahead and reach out, fill out the form on the page, give me a shout, email, whatever you'd like, whatever you're comfortable with. And again, I'll do my very, very best to help. Take care, enjoy your day, and hopefully talk soon.